My name is Kalu Aja. Welcome to the Money Spaces with Kalu. And we have a special guest today. I hope you guys enjoyed the music, right? That's Flavor. So that's my guy. I like to play him to keep you guys busy. So today on Money Spaces, we have Dr. Ola Brown. I'm just gonna do a quick mic check, make sure she can hear me, and she's there. I have her on there. Hi, Dr. Brown. Can you hear me?
Hi, how are you? I can hear you.
Great, Doctor. Great. Welcome to the Spaces with Kalu. So, Doctor, we're just going to have a talk about private equity, angel investing, venture capital, alternative investments, all that, right? But the very first thing is to have you introduce yourself. Normally, I give people like a minute or two to introduce yourself, but if I did that with you, we'll be here till tomorrow. Let me just tell you what I read about you, right? So, doctor, you're a medical doctor. You are an economist. You schooled in the UK and Japan. You're a pilot. You're an investor. You're a VC. You run a training camp. You're trying to make Nigerians eat swallow with beets, carrots, and alternative starchy foods. Doctor, what have I missed out? Just come on here and tell me what I've missed out.
Introduction is about the alternative swallow movement. I'm innovating and using blockchain technology to develop an alternative swallow movement, which I believe will be the default swallow of the world. I believe that the future of pounded jam is broccoli swallow, so that's the most important thing. But besides that.
So, I mean, is this a thing? You want to make Nigerians move from pounded yam to beetroot to cat? Is that a thing? I mean, let's forget about. I didn't talk about the bats. I'll leave the bats out for now because I have followers that are from that university. So I'll leave the bats out for now. But the beetroot thing is interesting, right? I mean, I get, I like it, but, it's interesting. Spinach swallow? God.
Spinach swallow, broccoli swallow, beetroot swallow, carrot swallow are the future of, just like Elon Musk is building the future of transportation. Wow. What I'm trying to bring is innovative disruption to the world of swallow. And what we're building, I think, can change the world.
Okay, doctor, we'll take your word for it. I mean, you're the expert, so I'm going to take your word for it, right, doc? Okay, great. So, doctor, let's just talk. Like, could you give us like roadside economist definition of what is angel investing, what is a VC, what's the difference, what is alternatives? Just give us this roadside economics definition so we can follow, understand what it is you're talking about, and then we'll take it from there.
Okay, so I've been angel investing for about 10 years in different businesses, and angel investing really is putting money into a business in exchange for usually some form of equity. And it can be from your mom or dad. Your mom or dad can be your angel investor, your family members can be your angel investors, friends can be your angel investors. They're also professional angel investors as well. And angel investing isn't just limited to technology. So, you might have a girlfriend, for instance, with a hair business or a makeup business, and you can angel invest into that business. But basically, they're people that invest their own money usually into other people's business, typically in exchange for an ownership stake. The angel investing scene right now has gotten quite interesting because the angel investments syndicates like the one I run, where there's lots of angels putting checks into different companies, and then there's also super angels, so people that write checks that almost like VC-sized checks, actually. And these are like high net worth individuals that are super angels and write much larger checks. But usually it's small checks, very early stage, quite informal. And from the tech perspective, usually these angel investors also have some kind of expertise. They play a role as mentors, etc. So that's angel investing. Now going on to venture capital. Venture capital is an investment class or an asset class used to back high-tech businesses, usually. And venture capital has been around since like the late 70s, let me say the 80s, but really came into its own in the 90s. And venture capital is institutional capital, so it's usually not the person's own money like angel investing. It's usually money that has been raised from institutions and is put into companies. And the difference between angel investing and venture capital is really the construction of the investment. So when you angel invest, then all the money sort of comes back to you when there's an exit. And I'll be speaking about exits a bit later, obviously. But when you are investing on behalf of an institution, then you have a fiduciary duty to that institution. Basically, you're looking after their money for them if you've raised a VC fund. And depending on how much of your own money is in that VC fund, most of the money goes back to the person that gave it to you. And there's a complex equation, which I explain in my venture capital and angel investing course on YouTube, that sort of calculates how much you as a VC gets to keep and how much you've got to give back to the person that gave it to you, because you're essentially working for them. So that's angel investing, VC, and a bit about the difference in a nutshell.
Yeah, so more or less, if I hear you correctly, angel is more or less informal, early stage equity. It could be your mom, it could be your boss, it could be someone that trusts you and all that. But VC is more getting to the formal stage of investing, more or less. You're going into more formality, still equity, but is that more the main difference between those two?
Yes and no. So I think, 10 years ago, yes, that was the main difference. But now there's a bit of a blurring of the lines between angel investing and venture capital, because there are much bigger angel syndicates that may have the same requirements. So it's more of a I view it as more of a spectrum between an early investor like asking your dad for money. And then next in the spectrum would be, dad's friend. The next in the spectrum would be a complete stranger that you're pitching that just puts money into businesses. The next in the spectrum would be an angel investing syndicate, which is a bit more formal. The next would be one of those super angels, right? That invest just like a VC, the similar amounts. And there are quite a few super angels that we know in Nigeria. And then obviously at the other end of that spectrum would be a formal venture capital firm that has raised institutional capital.
Gotcha. So it's more like the graduation, more or less, for a guy just trying to raise money. Okay, doctor, let's get right into the deep end, right? Let's say I am Kalu Ventures and I want to create a new station. This station is going to be on cable TV. It will broadcast only news. Only news, 24 hours, new music, no sports, just news on cable, right? People are going to work news 24 hours. I have a great idea. This is 1980. I go to my dad. So my dad says, okay, I trust you. I'm going to give you $1,000. What next? If I want to then raise capital, and I met you in the roadside, and you said you were private equity, alternative investment. What next do I do? I know you have all the green tree. Hold my hand and walk me through what you would do for me.
So your dad has already given you $1,000. So congratulations, you've got your first angel investor. So that's really good that somebody has written you a check, and hopefully that check has helped you scale the business to a certain level.
I bought a computer.
So then sorry?
I bought a computer.
So ideally, and not always depending on your network, and that's why I say it's not an exact science. Ideally, if your dad is, Aliko or Mike Adenuga, then probably with that laptop you can go to his friends and raise a massive round, because depending on the kind of family you're from, you can have access to different kinds of angels.
Good point.
So some people, particularly from particularly privileged backgrounds, actually tend to raise on the back of a PowerPoint with a computer and absolutely no revenue and an idea. But the less connected your family or school background is, the more likely that you're going to have to show some traction before you raise. It's not a fixed rule, but it's one of those things that if you had a sort of wide pool of people that have raised capital, I think the poorer ones that went to tier 2 or tier 3 universities probably find it harder to raise. And that's why, and their family networks as well really matter.
Okay, but go ahead.
If you just bought your laptop and you just got $1,000, depending on who you were, I might say, you need to show some traction. You need to show some revenues. I think your idea is fantastic, but you need to produce some content and perhaps even put it on YouTube and see how people are responding to it.
There's no YouTube. This is 1980, no YouTube. No one has done 24-hour news. It's brand new idea. 1980, yes. So this is CNN in 1980. Yeah.
You might need to get some traction with this idea before you can you need to produce some content at least, maybe have sold it successfully to some of the cable stations, gotten some revenue from that, and then be ready to scale up to your own TV station. So the first thing that an angel investor outside your family usually looks for is some form of traction. And like I said, remember, raising capital is not an exact science, right? Mike Adenuga's daughter will probably be more likely to raise capital than
me.
Chooks from that was born in Ibonya. Nobody knows his dad. That's just the truth. And you might need to show some more traction depending on your network.
Gotcha.
But traction is always good, regardless of your background. But what I would like to see as an angel investor from you in 1980 is some kind of track record. And even if on the VC side, right, if you're raising venture capital, any institution also wants to see some kind of track record. That, okay, you've been in this industry, you've got a great idea, and you've done something in this industry. You've generated some revenue in this industry. You've got some kind of track. And then your second groups of angel investors can come in and say, look, this is attraction. We're going to now buy some more equity. So your dad's equity is already there.
Yeah.
And now you're getting like a second round, right? So we can buy a bit more of the company. And your dad might say, you know what, Kalu, I've supported you for 1 year. These new people have come in with $100,000. I'm going to take what the valuation has increased over time. I'm going to take my gains and I'm out.
And
these new set of angel investors are now going to come in and give you the guidance and give you the connections. And I wouldn't be the best angel investor for you actually for this business. You would want an angel investor maybe that has worked in the BBC, for instance, or has worked in CNN, because those kind of angels, there are specific angels for specific industries, and those people are bringing a lot more than money. They're bringing relationships, they're bringing social capital, they're bringing introductions, they're bringing ideas for your TV station. So when you're recording, you can invite your angel investors around to bounce off ideas about the quality of films or the quality of news that you're getting. They come with equipment, maybe in their garage, for helping you make these documentaries because they're in the same industry as you. And that's why for our angel fund, we invest in healthcare and fintech, because that's where we have the expertise, that's where we have the networks, that's where we have the support systems. So I think there's 3 lessons in this story of your $1,000 enterprise. Number one, like you pointed out, your first angel investor is likely to be friends and family or somebody quite close. I think the second major lesson is around the fact that your initial set of investors can say, we're out, and and with a new valuation, you can get a new set of investors. The third thing is around angel investing and investing. Usually, some are generalist angel investors and some are more specific angel investors, and just finding angel investors that invest in your space. And I think the most important thing is fundraising isn't an exact science. Like most things in life, it's not entirely fair, right? If you have a huge network, if you went to Unilag or the Batch University, or LBS, Lagos Business School, then he might have a greater access to network than if he went to a tier 2 or tier 3 university, just because they're quite prestigious institutions on the Nigerian level. The same with Harvard. If you look at like the earnings of the average Harvard graduate compared to any other university in America, they just tend to do better. And I'm sure you'll see those things with Unilag, with the BAT University, and with Covenant University. You'll probably see those skewed earnings as well. So it is a game of network. It is a game of relationships, in addition to the founder and their ideas.
Gotcha. So my question is this, that's a follow-up, right? What I hear you say is relationship based. So if I'm a new guy, I have this idea to have a cable station. I want to go to funders, not just for the money, but for the relationship, for the technical side. Is that what I'm hearing you say?
Absolutely.
Okay. So I looked up Green Tree, and Green Tree is your firm. You can talk about it better. And I looked at your pitch day. And I read what you guys are looking for in a good pitch, right? Market size. So if I want to do this cable station, it should have what's the addressable market size out there for a 24-hour cable news station? Who is the team behind me? This is just me. I just have an idea. I want to have a 24-hour cable station. And then what is the judgment of the product? Will people actually watch news for 24 hours a day, repeat news on cable? On market size, I've failed. On the team, I've failed. On the judgment, I've failed. So my question is this: how does a guy and I'm from Abia, a tiny village called Ahafia. I have no contact. I think I went to a good university, UNN, Lions, Goya, yeah. So apart from
That's tier 1.
That's tier 1, right? Thank you, doctor. You're very kind. So
and you don't even have bats.
I don't have bats in UNN. We have what's called okpa. It's ground beans. So if you buy one in the morning, you don't have to eat again. But let's leave that aside. We digress. So market size, team, and judgment. I have failed. Would you still invest in me?
So your question is around what we look for. So I'll start with telling the story of Green Tree, and then I'll talk more generally about what investors look for. So if you're looking to raise money for your company, I'll explain for people that are thinking about becoming angel investors or VCs. I'll start with that and then move on to people that might be wanting to raise money and what investors tend to look for. So with regard to my own story, I had moved back to Nigeria and I started an emergency services company called Flying Doctors. It was an air ambulance company, and it started to do really well, and we made quite a bit of profit. So my friend Abbas, another friend Abiz, were almost in the same boat where we'd made some money, and at the same time there was this emerging class of companies that smart guys from Covenant University, guys from all these like sort of tech-orientated places that seem to be building really interesting stuff. So we decided to put some money in the fund, and you'll see that most venture capitalists, when they're starting a fund, they have to seed it. So we seeded it with some money, and then we went around different institutions to raise money, some from individuals and some from institutions, to put into this VC fund. And one of the first people that we met along this journey of startups was a guy called Shola, and he was doing something that I thought was called pay block. And I think I called it pay block for like 2 years before I realized it was pay stack. But at the time, it was just almost like an idea. They hadn't built it. But he was going around raising from angel investors and venture capitalists. So we wrote one of the first checks into that company. The company then went into
Doctor, who is we? Who is we?
So Green Tree is 4 directors: myself, Abbas, and Mr. Augusto is our chairman.
So we
had raised money. So we had raised money by then from institutions and investors, but this was back in 2014, I believe.
Gotcha.
So we did that deal. We did a few other deals, including it's been in the news all week. We invested in Big Cabal, Zikoko, as well as a few other companies, and the process of raising VC funds, I guess, is being able to put some money in yourself and then having a good network of high net worth individuals and institutions that will be willing to back you. But like I said, with the fund, a lot of the money goes back to the institutions and the people that backed you. It's almost like a fiduciary duty in that they are giving their money to you for safekeeping and returns. So the equation is usually 80-20. So when we have an exit, like we did with Paystack, so we invested very early. It was acquired by another company. We obviously made the money that our shares were worth. 80% goes back to the people that invested in you, and 20 comes to the people that were managing the money. So that's sort of the way that venture capital works. With regard to angel investing, the equation is quite different. You're putting in your own money. You haven't usually raised an institutional fund. So when you put money into the company, it all comes back to you when there's an exit.
Okay.
So that's around the questions that you're asking around VC and angel investing and how the money comes in and what we do with it. Now, with regard to your business, which is the cable news, I'll go back to that example, and what an angel investor or venture capital investor would be looking for in a business. Number one, the founder. The founder's skills, the founder's experience, and how they're able to build, how we believe that they're able, because you're betting on the founder, right? So that's really important. The team, who is already in the team, who is already working, and how much traction do they have with that work? And the more traction they have, the easier it is to invest, because you can see that this thing is real and it is generating money and they have customers, right? And then you look at the market. What is the total addressable market for this product? Where it's coming from?
Go ahead.
Hello?
You should be good.
Yeah, okay. So then we'll look at the market, right? So if you're selling high-end luxury cars, then your market obviously isn't 200 million people. It probably isn't even 1 million people, even though you're selling in Nigeria. So being realistic with the total addressable market and looking for something that can scale within that total addressable market, I think that's really important. And then after looking at the person and the market, the economics of what the business is. Regulation is also important. Is it a regulated industry? And I'm sure everybody has seen sort of a lot of drama around fintech regulation. We also look at the regulatory environment and look at how difficult or hard it will be to comply with the regulatory environment as well. And those are really sort of the products we look at as well. If there is a product, sometimes there isn't a product yet, but we look at the product and see how easy it is to use, how user-friendly is this a product that I would use, and then we kind of make our decision on that basis as to whether to invest or not. Angel investors typically are and some VCs are very thematic. So there's crypto-only venture capital firms, there's fintech-only venture capital firms, there's generalist firms, and every firm has a stage at which they invest in. So there's pre-seed funds, for instance, who would only do very small checks to idea stage companies. There's seed funds. There's Series A funds, which do larger checks. There's Series B funds, of course, that would do the $20 million, $40 million type checks. And those are more in the growth phase of the company. So I hope I've given context to, first of all,
yes, correct,
how to raise the VC funds, how to angel invest, and then also what an investor is looking for in a business primarily.
Yeah, because my question is going to the fact that CNN, no one would have invested in CNN in 1980s. It doesn't make any sense. Why would I watch news for 24 hours? There was no team to back it. There was no adjustable market size. I mean, I'm making an argument here. I'm not making an absolute argument, right? So if I'm a Nigerian guy that has a good idea, I want to create jam on the internet. I want to create a new currency. I'm looking for that thing. Is it a gut? I mean, when we go through adjustable markets, team, judgment, is there a gut feeling? How did you know? For instance, you talked about pay block. How did you know that product was good? Was it because he was your friend? What really made you believe that this pay? I think that's pay stack we're talking about, correct?
Yeah, I called it pay block for 2 years.
Gotcha. Okay, pay block. So how did you know that pay stack was a good idea? Because I'm trying to walk to the answer. So someone listening that wants to create a product to go to, or say an angel or a VC can say, if this is how they look at project and say score them, then I want to walk back. We know business plans. We know how to go online and write a pitch deck. But what else?
So for us, we already had our eyes on fintech. So most of the people on the board worked in financial services. So we were always going to be people that invested in financial technology. And why this particular team? There was something apart from looking at the market size and doing the analysis and putting it all into an IM, we felt like the founders were really, really capable of making it work, really, really dedicated, high levels of integrity, communication with us, understood the space particularly well. And when they came to us, they already had some traction. So they already had some proof that, okay, customers were willing to transact with them. Which helped, whereas I think that if they just came to us with an idea on paper, that wouldn't have been as convincing as the fact that they had actually already achieved some traction.
So, Doctor, is traction in over 100%? How big a percentage is traction in the scoring system? If I come and I say, it's a good idea, my dad already watches it, his friends already watch my CNN. How big is that in terms of your decision process? Traction, i.e. revenues, quote unquote.
It doesn't have to be revenues. It just has to be signs that this is a product that the market wants.
Gotcha.
And that can be sort of demand, that can be an off-taker, that can be a partnership, that can be user numbers that are not even paying, that can be visits to a website,
gotcha.
That can be anything that shows that if we fund this, it's going to make progress from all the indicators that we see right now.
Gotcha. Is traction more important at the angel level? Because my dad loves me, so he gave me $1,000. I don't think he looked at my paperwork. But is it more? How important is traction at the angel, the very, very beginning? Well, I've used my own funds, so we're talking family and friends now. How important is it at the very, very early stage?
I think throughout the venture capital and angel investing cycle, traction becomes more and more important as you progress. Okay. So at a pre-seed stage, when it's your family members, they love you. They want you to do well, and if they have the money, they'll try and back you, whether the idea makes sense or not, right? But when you get to your first set of institutionals, you'll experience a bit more scrutiny.
Gotcha.
And then when you get to the second set of institutionals, maybe a Series A, well, that starts to feel like a serious deal. And founders always complain about the huge jump between seed and Series A. Like at Series A, they're sitting on your board, they're looking at your books, they're making sure you have audited accounts. Like everything has to look like a proper company.
Yeah.
By Series B, it gets extremely serious. And then when you get to C, D, E, it's more private equity-like than actually venture capital-like. And, at that stage, those investors do tend to be quite prudent and quite challenging. And the terms change as well, because we're talking about much larger sums of money. And you might have seen the announcement from Tiger Global, one of the world's biggest venture capital firms. They said they're not even going to invest in Series D, E, F anymore, because what they've found is that the pricing in the private markets, there's a disconnect between the pricing of companies in the private markets and what the public markets are willing to accept. Okay. So there's this whole spectrum from pre-seed, when your dad doesn't really care because he loves you, to the public markets, where the amount of scrutiny, you can get marked down from Series D or E in the public markets by 30%, because those ones have no emotions at all.
At all.
Gotcha. They've been on Wall Street for the past 100 years, and they have all types of ways of monitoring the company. So even if the VCs do not know what they're doing, the public know what they are doing.
Gotcha.
And I think people, that transition now, if you start to read the news about venture capital, there's an increasing sense of overvaluation in the market. And I think I just tweeted that when the public markets sneeze, the private markets catch a cold. So we're gradually catching that cold right now, and reviewing our valuations very stringently, because the public markets have decided, these VC companies are not worth all that at all.
Gotcha.
So we've had to also start cutting down on our valuations and being quite realistic. So you asked whether there'd be more scrutiny.
Yeah.
Through the whole process up until when you IPO, there will be increasing amounts of scrutiny.
Gotcha. And okay, Doctor, just to close this out with my example, and guys, if you want to ask a question, send me a DM or request to speak. DMs are perfect because I can just read it out to Doctor and then we can move. But Doctor, if I had a good idea and you saw it was a good idea, but my pitch was horrible, I didn't know my numbers, I didn't understand scale, good idea, bad implementation, bad delivery, what do you do?
We see everybody on this call, all 482 people on this call have a multi-million-dollar idea in their heads right now. Believe it or not, everybody does. As I'm speaking, there's $483 million speaking to me right now. You all have $1 million idea. But the percentage of people that have the capacity to execute that idea, completely different playing field. So sometimes, right, I've seen a really, really good idea. And most of the ideas, particularly when you only invest in health tech and fintech, are more or less the same. Everybody comes up with electronic medical records. I see electronic medical records once a day, guaranteed. I see lending app once a day, guaranteed. I eat it for breakfast. So what makes it differentiate one lending app from another lending app? It's not, they all have the same idea, but it's the team and the execution, because, there's a lot of issues especially in the venture capital world in Nigeria, where when things get stressful, right, and when you've invested in a founder that isn't particularly resilient, VCs have just received a resignation letter from the founder that he's now in Germany. There's nothing you can do. You invested equity. People walk away from VC-funded companies all the time, and they do so without remorse. In fact, one was telling me that he had invested in a founder, and the founder used his Google email from the job that he had just taken to say that he's no longer in the company.
No way.
So what you're looking for is not the idea. I think that the idea doesn't really matter. And plenty of companies that I've invested in, the idea of what they thought they were going to do, they've changed it, and the company has evolved over time. So I'll give you an example. Helium Health. At the time we invested, they were only doing electronic medical records, but now they've evolved into a telemedicine company. They've acquired a doctor's booking platform. So it's so much more robust as a software platform than what we invested in. They're basically building the rails for healthcare, the software rails for healthcare, whereas when we invested, it was just an electronic medical records company. So the initial idea kind of evolves and changes over time. I mean, Samsung, I say in my angel investing and VC school on YouTube, that Samsung started as a fish company.
Fish.
Yeah, they started by selling fish, dried fish. That was their thesis. So people, really resilient entrepreneurs, even if something isn't working, they grow and evolve and pivot and change their idea, but they stick at it, right? They're super, super gritty. But what you don't want is the person that after 6 months and a little bit of hard time, they'll tell you that they're in Germany, that they've won visa lottery and they are no longer doing startup. They're now working
Doctor,
at Siemens.
you're killing me. Doctor, I hear you, right? Let me just ask, so let's talk about pitch day, because I think I'm trying to lay a story out for the listeners. We have about 510 listeners. Many have joined to understand this VC thing. Many have seen Flutterwave 3 billion. Doctor made a lot of money in Paystack. Many have seen those headlines and they want to get into it, not because they want to make money, but because they have an idea. They can't go to the bank. The bank is debt, which might be expensive for a startup, which is clearly that. And they can't go to the Nigerian Stock Exchange because they're not that big. So they're looking at this as maybe a viable route to scale. So we're asking these questions just to give them that ammunition, right? Let's talk about pitch day, Doctor. Give us a sense of what happens at pitch day that you guys hold. Because I have a few questions here. Someone is asking me on DM, if I want to invest, and I don't have the skills. So he's an investor. Another guy is asking me, I have an idea, how do I get in touch with Doctor? So 2 people are talking to you now on pitch day. And I see that's what you guys have on your website. You have for investors and of course for the entrepreneurs. Talk to us about that, please.
So on a pitch day, now pitching and fundraising, again, I'll keep on saying it. It's not really a function solely of your idea and your traction. It's also a function of your network. Yes, a lot of pitch days happen, but I'm telling you that 99% of deals are not done on pitch days. They are done by introductions. That's just the bitter truth of the industry.
Doctor, say it again. Say it again slowly. Say it again slowly. On the golf course, at Thistle Bar.
9% of deals are not done on pitch days. I assure you, it's done by introduction. And I talk about that extensively in my due diligence course as part of my angel investing and VC course on YouTube, because it is unfair. In the US, for instance, Black-owned businesses are less likely to get funded because these people grew up in Compton. They don't know about what's going on in San Francisco. They don't have that network. Who do they know? They didn't grow up in those kind of areas where you can meet people. And the same way in Nigeria, it excludes certain classes of people in terms of demographics. It also excludes women. But I'm just telling you the truth so that you know, right? Yes, there's a lot of pitch days, and apply for every pitch day you can find. But 99% of deals is by soft, warm introductions to venture capitalist or an angel investor who can write you a significant check. And the less networked you are, as a rule of thumb, the more traction you would need to attract investment. Interesting
equation there. I hear what you're saying. So for me, from Abia State, let's say I went to, let's not name universities, right? But I went to tier 1, right? But if I go to another university and I have a great idea, I'm going to struggle more. I live in Ajegunle. I have an idea for Flutterwave. I'm going to struggle more because I can't get to VI and Lekki, to those bars where those boys on Fridays go and have a drink and talk about investing.
Absolutely. And that's the irony of life as well, right? Even in the job market, network is over everything. Most jobs are not advertised publicly. they're referred, or people are headhunted for those jobs, and if you have a good network, then you're more likely to hear about these positions. So it's exactly the same thing in the VC market, I'm afraid. Like knowing the investors, and there's something that Harvard Business Review says that I love. The best time to build your network is before you need it, and the best time to keep your network strong is always. So before you begin as you begin to build your company, also begin to build that network of funders, of VCs, of angel investors, and keep on communicating with them. So as soon as you get an email, don't necessarily go in with your pitch if you're not ready, but just say, do you mind if I add you to our newsletter and keep updating you with our progress? Today we had our first 2 customers. Today we signed a partnership with Zenith Bank. Today we quadrupled our revenues. Today we did this. So that when it comes to actually having those conversations about, I think we're ready to raise a seed, or I think we're ready to raise a pre-seed, people have become part of that story.
Oh, I hear it. So continuous engagement, even if you were not actually looking for that quote unquote business, you have to be in their face.
Not necessarily in their face, but they have to know of you. They have to understand what you're building, and you have to have built some sort of relationship with them over time. So they're part of that story. And like I said, it's easy. Like, it's easier said than done, right? Because like if I was just before this this talk, I was talking to some of my friends' children, and my friend's child has like a group of young rich kids that they have career talks together. And they asked, like, is there value in going to Harvard, or should we go to the school that we like? I said, there's value in going to Harvard, though. If you get in, don't talk about the school that you like. I don't want to hear it from you. Like, Harvard people, data-driven, earn more than any other US graduates. And it's because of that network. It's not because of what they're teaching. And at the same time, there are people that were part of certain institutions, like the KPMGs, for instance, like the Zenith Banks, for instance, like the Baptist University, like Unilag, that just have more access to network than other people. And when you explore that network, you'll begin to find angel investors, you'll begin to find venture capitalists. They can introduce you to people, and one introduction leads to another. But I think you need to think almost as carefully about your fundraising strategy as you do your as you do your product strategy. Because in the technology game, fundraising is actually quite important. I'm not saying that you can't bootstrap. A lot of businesses do bootstrap. And if you don't have that sort of network, you may have to bootstrap a bit longer and build up using your own cash flows. But like the Flutterwaves and the Paystacks of this world and the Kudu Banks of this world raised external financing, and that has definitely helped to accelerate their growth. But I assure you, as 5 years ago, there were probably 10 companies in Nigeria that had the same team as Flutterwave in terms of IQ, intelligence, had the same revenue as Flutterwave. Maybe we're even making more money. And we're going after the same market as Flutterwave. The difference was Winger was able to raise the funds, and none of them were able to.
That's it. Yeah, mic drop right there. That's it. And I hear what you're saying, Doctor. And a guy is pushing back with Mark Zuckerberg, but I answered that Mark Zuckerberg was in Harvard already. He's talking about Mark Zuckerberg and Thiel.
It was even Facebook's original name was Harvard Connect.
Oh my God!
It was only supposed to connect Harvard students to each other.
Yeah.
Then it now moved to Stanford. Then it moved to Yale. But because it was in an elite group, that was why it was so successful, because guess what? Every other university wanted it. And when Facebook first started, I was at York, and we went to go and play rugby in Oxford. and they had Facebook. And I came back and I said, look, because Oxford and Cambridge are the tier 1s, York, Durham are the tier 2s. So we all came back and said, look, we need to get somebody in Oxford to get this Facebook before Durham. Because if we're not the first tier 2 to have Facebook, we're in trouble.
Yeah.
But like it started from a very elitist point of view. I'm not sure that Facebook would have gotten the traction if it came from Wyoming Community College.
Oh my God. So Doc, is pitch day, are you trying to equalize this field? Let's talk about the guys that want to pitch. The investors will get to them later. But if I had a good idea, is that a way for me to come and talk to people if I don't have the reach? I'm from Abia State. I went to a tier 3 university. I have a good idea. Can I do that on pitch day?
Definitely. Attend every pitch day you can. Every pitch day you can. In the knowledge, just like I cannot tell you because your father is not Tony Elumelu, then you should not apply for jobs. I'm just telling you that 99% of jobs are not advertised.
You're just saying. Okay, Doc, I hear you, Doc. Doc, let me clear up some messages. Let me just clear a few messages up. So Obia is asking, are there firms that are allowed to invest, thereby whittle down the risk? So are there, I think it's asking really that to kind of company like the investors, if I have money and I want to invest in startups, can I do that with you guys? Like I have the money, but I don't know how to read a pitch deck and all that. Is there an avenue for me to be an investor? I guess that's what he's asking. Okay, if I didn't answer that question, ask me. Yeah.
So we have something called the FDHIC Catalyst Fund, which is an open fund, meaning that it's a membership. So you join and invest in all of our deals, and that's been going on for the past 6 months. And there are a whole group of people from Nigeria and beyond that invest alongside us in fintech and in health tech. So we do all the due diligence, we do all the deal sourcing, we do all the analysis, because I feel like it's really about people that, there's lots of people that have an entrepreneurial side. Maybe they're even in full-time jobs, right? But there's a certain level that you get to in your career that it now becomes quite dicey to go and be an entrepreneur. So, like, let's say you're a GM in a bank. Your house in Ikoyi, very soft. Your car, extremely soft. Salary, all paid for. Children in St. Saviour's and, Zenith Bank is even paying for them to go to Oxford. I don't think it's even advisable for you to go and risk your life on the streets, just in case it doesn't work out, right? But they still have some entrepreneurial energy. So those are the kind of people that tend to invest with us in our Catalyst Fund. And we have meetings every month where we bring deals to them and then they can choose whether to invest or not. But those people don't have the time to go and be looking for CAC, to go to the police and be doing background check on the founders, to, do all the due diligence that is needed, to do all the economic analysis, to build the financial model. They don't have the time or the bandwidth to do all of that. So we just present the deals with all of that information, and then they invest with us. So we set up the SPV, and they invest alongside our fund in not all of our deals, in deals that they choose to come along with. So yes, that's very possible.
How much, Doctor? What's the minimum to get into this club?
Oh, it's just a membership, and it's, I think, around $1,200 a year.
Okay, I pay $100 a month, and I can get into a club that gives me access to deals that you can source and do due diligence on and all that kind of stuff.
Yes.
Gotcha. Simple enough. Someone is asking you, Doctor, what's your YouTube handle? They want to watch those nice videos that you do. They do not know your YouTube handle. If you could tweet it out or say it here, that would be appreciated.
Yeah, it's Dr. Ola, but I will tweet the link to our Catalyst Fund. I'm just tweeting that, and then I'll also put my YouTube channel. But if you go to my timeline, like literally every other video that I tweet out is from my YouTube video. But just in case, I have just tweeted the link to the Catalyst Fund. If any of you want to join, everything is explained there. Excellent. If you want to become an investor. And then for my YouTube channel, I'm going to tweet that now as well.
Excellent. Doctor, question for you, right? Can you mention some VCs that are looking looking to invest in companies specifically for health tech? I don't know if you can mention it, but that's a question. And the second question, pitch day for Green Tree was last in 18. Is there another one coming up? Can we apply? When is your next one? That's what they're asking.
So we don't have any more pitch days planned yet, but I always tweet them out when we do have pitch days, so I'll definitely let you know.
Okay.
As far as I know, FDHIC and our Catalyst Fund, those are the two funds that we're running, are the only people that concentrate 100% on fintech and health tech. Super. But there are a lot of generalist funds like Lofty, like Microtraction, like Future Africa, like Ingressive, that don't solely focus on health tech and fintech, but would invest in health tech or fintech if they saw an interesting deal.
Gotcha. And someone was asking a question for non-tech startups. That was Kingsley. He was asking, everyone is doing tech. Are there startups for non-tech? I guess your answer responds to Kingsley perfectly. Doctor, let me just ask you a question. Let's come back to you, right? You talked about women, and I saw you in an article you wrote, 63% of women are less likely to get funding. You said when they look at women, when we look at a pitch deck, 2/3 of women do different ventures, like women do different kind of business. Could you talk about that and around this lack of women, should we say, getting funding? I saw the report for funding in Africa. Women were like less than 1%, right? Nigeria was number one. But when you drill down Nigeria in terms of who is getting funding by gender, women disappear.
Absolutely. So I think the number one reason that women don't get as much funding, well, I would say there are probably three reasons that women don't get as much funding. I wouldn't say number one. Number one is, I would say, is because the people writing the checks are not female. Venture capital is still a very male-dominated industry, right? So men support men.
You say it all the time.
Sorry?
You say it all the time. Men helping men edition.
They do. But you know how, like, I can remember, like, sometimes, like, people make a comment to me, like, oh, you know, you women have it so easy that all you have to do is smile and get what you want. I'm like, how many female governors do we have? That's what she wants. You don't get anything. When you get, like, a pair of shoes, but the people that hold the power are men, and they help people like them. They do favors for people that look like them, and I think that that's natural. And there's actually data to support this, actually, that if you look at the data in psychology, you see that even people that get married, right, you're more likely to marry somebody. We love ourselves. We love people that look like us. So you're more likely, according to psychology, to marry someone born in the same month as you. Weird, right? Crazy psychology.
Interesting.
You're more likely to marry somebody whose name sounds like yours.
Interesting.
And you're more likely to do, an Igbo person, for instance, is just more likely to do business with an Igbo person. We love ourselves. We love people that have things in common with us. So it's not surprising that, you know, men do business with men. And so I think the check writers are important. The people that write the checks are important. Number two, I think it's a function of networks as well. Like, I am a mega networker. I'm always out of the house, always shaking hands with people, always at events and meetings, and I'm continually making that effort to strategically meet who I need to meet for my business. I'm, like, you know, on a plane, I would say at least 30% of the year. If it's not between here, Abuja, Port Harcourt, even Maiduguri, I'm there, Sokoto, I'm there, Zamfara, I'm there. I've been to every single state in Nigeria.
Nice.
On business. And, you know, my husband doesn't travel that much, actually. But I'm telling you, if you want to compare my network to his network, you cannot. Because don't forget that he's a guy. None of the people that he went to university with, none of the people that he went to work with have taken 5 years out to look after the kids.
Oh,
or to
my
focus
God.
on their families.
Doc, you're going there. You're going there.
They're all in the Senate. They've all moved forward in life. They're all in the Senate. they're in NNPC, they're even in the FCC, they're in the police, they're in every strategic place where you need a strategic partner in this Nigeria, they're there. But every single one of my best friends from school has taken time out to look after the kids. Or they followed one husband to Australia or some Thailand because he became an ambassador, because he got one job there. I'm actually the only one of my close friends still in full-time work. You won't believe it. So, like for women, once they get to a certain age, the network just scatters. Nobody is anywhere anymore. Everybody is just scattered around. Whereas for men, it just keeps on getting stronger and stronger. Even at that 30, 40 age, where you cannot even source for anybody within your peer group that is really like, they're all taking time out, they're all facing home duties, they're all trying to balance. That is when men are even really facing their career full on. So their networks get stronger, our networks get weaker. And I told you, it's not about pitch day. Go for pitch day. If you apply for as many pitch days as possible. I'm not saying that you should not apply. But telling people not to apply for pitch days is like telling people not to apply for jobs on Jobberman. Apply for jobs on Jobberman. But remember, 99% of jobs in Nigeria are filled by recommendation.
Doctor.
It's like CBN. If you want to work in CBN, by all means apply. But we know.
Doctor, please make this good for us. Let this go down like real pounded jam, not spinach swallow. Make this go down. Yeah.
We know that recommendation is the most common way for people to get certain kinds of jobs, and we know that recommendation is the most common way to get funding. That is just the truth. But go for every pitch day if there's no other option. Go for every open pitch day, because that might be your only chance. Just like applying on Jobberman might be your only chance. If you want to work at NNPC and you don't have anybody to introduce you, then by all means apply on Jobberman. But I won't say more than that.
Okay, I hear you. Doctor, quick clarification. Is it 1,200 initially or 100 a month? How does someone's just asking for clarification? And if there are other issues apart from the funds, is there a due diligence background on the guys that want to invest? Just a quick question on that.
There's a due diligence background on the people that want to invest. Yes,
okay.
There is.
Okay, gotcha. And then we've answered that. Okay, doctor, so I have a follow-up question again. I heard you talk about, just as a beside, right? You are saying we should list Nigerian liquefied natural gas. I just want to get just to throw a curveball at you. I saw it somewhere in your videos. There was a hippopotamus around there. What's your thinking around that?
I think that I'm very, very passionate about stock markets. So 30% of US households have money in the stock market, compared to probably less than 1%, I'm just estimating, in Nigeria. And if you watch my video on corporate governance, where I give a whole lecture on corporate governance in public markets, you'll see that stock markets matter. It's very difficult, like you said at the beginning, for a bank to back an innovative business. But people like you and I, people that invest in the stock market are more likely to back an innovative business. So even when you look at countries that have weak stock markets, Germany, for instance, is supposed to be on the same level as America in terms of innovation, but they have an extremely weak stock market. Everything is reliant on German banks. And what do German banks do? They'll start doing analysis paralysis on every innovation. And that's why you can never see any startup coming from Germany, even though they're just as smart and just as developed as the Americans.
That's an interesting point.
Americans have a large and active stock market. So I'm so passionate about the Nigerian stock market because no bank-centered economy can prosper. It has to be a stock market centered economy. So the reason why I'm saying that I'd like to see LNG listed is because everybody knows LNG is a money printing machine. They'll pay good dividends. They have transparent processes. People will buy into a good quality stock. So LNG is a good quality stock. You saw MTN when it listed. It was oversubscribed. Everybody wanted a piece of MTN.
And women.
Yes, it was all women.
Yeah.
I'm so happy to see that because that is a good quality stock. So if we're bringing good quality stocks to the market, the likes of LNG, the likes of NNPC, then you'll see that the value of the Nigerian Stock Exchange will begin to rise. The liquidity in the stock exchange will begin to rise. And the funding of innovation will begin to happen because stock markets are better at funding innovation than banks anywhere in the world.
I like that. Okay, doctor, question for you, right? Someone is asking, I think this is CBS, is asking if I want to work in a VC firm, he wants to work in a VC firm, and he's asking for any advice for him.
I think, VC is a fascinating space to work in. And breaking into VC right now, because there are so few VC analysts, actually should be quite simple. There are vacancies advertised at most of the VC firms. So I'd advise you to follow all the major Nigerian VC partners. And then make sure that you watch my course on angel investing and VC. So if you do get an interview, you'll be able to articulate yourself properly in terms of deal sourcing, due diligence, exits, portfolio construction, etc. You'll know the lingo. But yeah, I would advise all the VCs that I know, at least on Twitter, they put their vacancies out when they have them. So when you interact with these people and they have vacancies, you can apply. And it's always interesting to see when a new VC fund has been raised. Because when a new VC fund raises, you know that they're going to be employing people. So keep your eyes peeled for somebody that has just raised their funds, because that means that they'll be bringing people on to come and work with them. And then any finance courses that you can do. My course is free. There's some courses that are paid. So any finance courses you can do in the VC or PE space will also help you to be able to, when the time comes and you get that opportunity, to be able to really convince them that you're the right candidate for the job. And don't be afraid to take an intern job or a junior analyst job that might be below the pay that you're expecting, because once you get the skills, you can really easily kind of move on within the company, or get a job at another VC firm.
Great, Doc. And just a last question.
Fund.
Oh, well, that's a possibility. So last question on this before we move into the economy, right? Someone is asking, this is Bob the Builder, he's asking, is there any openings for a property tech under Dr. Ola? Are there like specific requirements for a property tech startup, I guess, seeking funds? So he's talking about a startup but property side of it. I know you do mostly health, but he's asking about property.
Yeah, we do health and we do health, wellness, and fintech, but most of the generalist funds will invest in prop tech. And there's a few interesting prop tech deals going on right now. So it's just about connecting with the ecosystem, connecting with angel investors, and also getting traction within your firm.
Is there a place I can go to if I want to see all these deals or all these VC firms? Is there like a website, or is there like a place I could just go and I can see stuff like? Is there a place you recommend I go to?
I don't know if there's anywhere that lists all the VC firms in Nigeria, but I think if you type in Google VC firms in Nigeria, you'll find most of the big ones. Okay,
excellent. Okay, Doc, let's talk economics, because you're an economist, right? And I see all your videos, I watch them. Are those videos for free? Thank you, Doc. Thank you so much. They're very helpful.
Oh, okay.
Yeah. Okay.
I'm glad.
Yeah, we watch them, and we learn from them. Let's talk about Nigeria. Yeah, let's talk about Nigeria. I watched a video where you talked about the country has 3 types of crisis. You listed them, currency and all that, right? If Nigeria was a startup, came to you for funds, what would you do? Would you invest in Nigeria? If you would not, and you were commissioned to write a paper and say, this is what you should go do before you come back to get investing or to get seed funding or angel, doesn't matter. Would you invest, number one? I'm putting you in trouble. Would you invest, number one? And if you will not invest, what should Nigeria do to get your investment?
So I'm a Nigeria optimist, right? Because, I grew up in the UK, and I didn't grow up in London. I actually grew up in a town called Lowestoft. And I can remember, because my husband, I call him Oyibo, Pepe, I always tease him and call him colonizer, but he actually grew up in Nigeria. He is of British heritage, but never lived in Britain. So whenever he used to make a grammar error or something, I was always like joking that, oh, it's because you went to school in Kano and you weren't like, privileged to have a British education. That's why you're making this mistake, right? As a joke. But then I took him to my village. I took him to Lowestoft, where the town where I grew up, and we walked past my primary school, and there were only like 3 classrooms. So primary 1 and 2 were 1, 3 and 4 were 1, 5 and 6 were 1. And that night he told me, Ola, never make fun of my school in Kano. My school in Kano was 10 times better than this room.
That's what they call C finish.
So I didn't grow up seeing many Africans in general.
Yeah.
So I always looked at Africa as a place of opportunity. And obviously my mindset when I was moving to Nigeria was that it would give me opportunity. And it definitely did. So I'm a firm Nigeria optimist, and I'll always double down on Nigeria, right? I don't think I hope I never lose faith in this country, because this country has been such a blessing to me and to sort of the impact that I'm able to make. So I would always invest in Nigeria. But in terms, so I'm a Nigerian optimist. I may be the only one left, but yeah, I am. And so I would invest in Nigeria. But the things that I would like to see fixed in terms of the economy, GDP is what we need. We need economic growth. We need to grow faster than we're growing. Right now, the economy is growing at about 3%. Population might be growing at 3 or 4%. So we're all getting poorer. And why are we getting poorer? Because we're not generating enough. And why are we not generating enough? There's only 4 components of GDP. There's investment. There's exports. There's government spending.
Of course.
Sorry?
Consumption. Did you mention that?
And there's consumption. Yeah, and there's consumption. So Nigerians really are in the way that they're supposed to be consuming, right? The consumption is quite low. That's why we have satirization. And the consumption gets smaller and smaller. So unless people get richer, they can't consume. So that one is out. In terms of growth, you can't grow through consumption. So we have 3 left. We have government spending. Oh gosh, like government spending is very, very difficult right now. The amount of tax that Nigeria is able to extract from the population is 6%. In Afghanistan, with Taliban, with all those things happening, fighting America, it was 9%. So, Nigeria isn't, in terms of government income, they don't get very much, so they can't spend very much, so let's put that out. But the only 2 things that we can do that affect economic growth are investment and exports. And we're not very good at exporting. I can remember even when I was a kid and my parents used to tell me in England about agriculture and, Nigeria is going to export yam and all these things and we need to go back to agriculture. I don't think we're very gifted in agriculture. We always get it wrong. I can remember reading one article where it said that there were weevils in our beans and we got banned from the EU again. We need to figure out what we can export apart from crude. And then we need to be able to attract investment. And the global investment game, foreign investors come into, it's like a beauty contest. Foreign investors are attracted to things that are beautiful, right? Easy to do. There's infrastructure. There's, you can get your money out on time. The people are trustworthy. There's good corporate governance structures, etc. So I think if I was trying to fix Nigeria, I'd be working on number 1, beautifying Nigeria to investors.
Beautifying Nigeria to investors.
Yes.
We're going to drill down on that. But I'm writing it down. Okay, beautifying.
Contest for investment. And then secondly, I would focus on exports, whatever I can export at this stage, because we're not liquid. We're not, we're not growing at a fast enough pace to take care of everybody. So I'd focus on exporting whatever we can export right now. I wouldn't be trying yam and beans anymore because we've been trying that for 50 years and it hasn't happened. So I would conclude that we're probably not good at yam and beans. Whoa. So what can we export that we're actually good at? Where do we have competitive and comparative advantage? And I'd focus on that.
Okay, so beautify Nigeria, focus on exports. These are 2 broad categories. So I read somewhere in a tech magazine, an Israeli firm had created like a little node kind of thingy. What you do when you shoot a video or you shoot a song, you attach the little, like, I don't know, it's an app or so on the song, right? And if I download the song, I have to put a code to play the song or to play the video. I was thinking Nollywood. I've been everywhere. You go to Atlanta, there's Nollywood. You go to Kenya, there's Nollywood. You go to US, there's everywhere is Nollywood. Why can't we export Nollywood? Like, work with the guys in industry, attach something like that, and then we're actually tracking. I mean, you go to the airport, we'll have briefcases, boxes filled with CDs going to export. Just drill down on your export side of it. Yams and beans, we've done that, been there, hasn't worked. Cocoa, we've done that, been there, hasn't worked. Can we start to look at other things? Nollywood, Flutterwave, Paystack, that's exports, right?
Yes. So scaling our companies and getting income from abroad, that can be exported as well, software exports. So India, for example, exports something like $100 billion, if I'm not mistaken, in software exports.
What?
Everybody uses Indian software. So that's a great source of foreign exchange into the country. And that's why they don't have these problems of severe devaluation that we have. The reason why we have so much devaluation is because we're not exporting anything. A country has to export, right? And we can't. And we keep on investing more and more in agriculture. And like even sometimes you see like people of our parents' age saying, oh, all we have to do is to fix Nigeria is go back into agriculture. We need more young people in agriculture. I'm like, 70% of Nigerians already work in agriculture.
Already, good point. 90%? Yeah, good point. Good point. In Ohio, you see a family of a guy and his wife, and they're running like a 3-acre farm on computers with a combine harvester and all that. So that's maybe the agriculture we should be looking at. I don't know. But still, this is...
So the Netherlands. The Netherlands is the second biggest food exporter in the world.
Tiny.
And less than 5% of their population works in agriculture.
Uh-oh. What about Israel? I mean, you can give examples all day. So I think we have to change the idea of agriculture is not taking a hole to dig the ground and put a cassava tuber in the soil. That's what they do in my village, but that's not agriculture. Mm-hmm. That it has to be something that processing, mechanized, not using rainfall, irrigation, hybrid seeds. Cassava, for instance, is a special crop. In the ground, it doesn't go bad. Once you take it out, it goes bad in 2 days. So the trick is to take it from the ground, to process it, and to make either gari. So 2 things here. If you make cassava, you can make gari and sell it for Naira. Or you can do ethanol, i.e. dried cassava chips, and export to China. The problem is... you can't get it.
But there are some things that Nigerians have already shown they're good at. I think we've been doing this agriculture for 40 years, and there's something called competitive advantage, something that you're naturally good at without anybody helping you. So we've done intervention scheme for agriculture to I think it's obvious that needs to wait now. What are we naturally good at? We're naturally good at banking. We're naturally good at lawyering. We're naturally good at singing and dancing. We're naturally good at comedy. We're naturally good at Nollywood, right?
Soccer.
So I think it's easier to do the things that you're naturally good at, that have thrived without any government effort or intervention, than do the things that we've clearly shown that we're actually bad at.
Like rice production and maize production.
Exporting of beans. How can you be exporting beans for 30 years? And the one chance that you have to export to, there were still weevils inside.
Oh my God, doctor, this is okay. For the record, this doctor said it. I did not say it. Right. Yeah. So
no, I'm just talking about the theory of comparative and competitive advantage. I'm not saying forget about agriculture, no. But I'm saying like there's some things that Nigeria and Nigerians have shown that are ready for export today. And we can, make those value chains. We can monetize those value chains. We're already showing excellence, global excellence in some areas. But agriculture is not an area where we're showing global excellence at the moment.
To whom it may concern, the doctor has spoken. And Dr. Yusuf is adding, he's saying we should export our ability to speak English. We can copy India and be a powerhouse for call centers. And why do we do that?
Absolutely. I really think our English message is even clearer.
Yes.
Like we can, I really think we have the ability to do large scale outsourcing. So I feel like these are some of the things that, if we're focusing on exports, if we're focusing on forex generating exports that can stop our currency sort of diving into free fall and increase our foreign reserves, definitely these are the kind of things that I think work.
Great. So I don't know if people have requested to speak. Sometimes Twitter just doesn't let anyone pop in, but I'm getting the DMs. If you do want to request to speak, you can all do that and I'll add you in. That's completely fine. We're not stopping anyone from speaking. So Doctor, I want to just, this pay stack deal still interests me just because of the money involved, right? What else? If I want to look for something like that, how can I find the next one? Where is the next thing coming? I saw helium. Helium is looking interesting. Where is the next opportunity going to come from in Nigeria? Suddenly we have this boom is here. From your story, it wasn't suddenly. You guys had been investing. You formed a team. You had Augusto. You had the guy from Wild Fusion at Barisime, and then you guys basically invested. So you guys knew stuff was up. You went back, created a company, and you invested. Doctor, what else are you doing now that we should copy you?
So we're doing deals every day. That's what I do. That's what I go to work to do. I go to work to do deals, and I do deals full time. So our thesis, and every venture capital firm, every fund, every investor, every super angel has a thesis. Our thesis is around financial technology. This is an area we believe that Nigeria has creative and comparative and competitive advantage. This is an area where we believe that we can still win. This is an area where we feel that there's still space in the market. This is an area where we feel that there will be a lot of M&A activity. And this is a space where we feel that eventually Nigerian developers will probably be developing products for export. So this is something that we're very bullish on. Also very bullish on health and wellness tech as well. And from that perspective, it's just an area that we as a firm know a lot about. We can make introductions, we can help the companies scale. We have a huge degree of expertise in that area. So that's another part of our thesis. So that's what we're doing. We're investing heavily from a Pan-African context in health tech, number one, and in fintech, number two. And they're both areas we feel have enough sub-diversification to make sure that we don't have we're not giving ourselves sector risk. So in terms of the health tech universe, we have investments in smart plants manufacturing. We have in logistics, we have in EMR, we have in doctors' bookings, we have in even a healthy fruit company called Real Fruit, for instance. And for fintech, again, we have a lot of investments in financial technology, from crypto to payments to credit to enabled e-commerce. So we make sure that we're super diversified within the sector and then super diversified by country as well.
I wish I could make you write everything you just said down now, because we've got about nearly 800 people listening. And I wish I could make you write it out and tweet it. Or I can tweet it just to give us a sense of what you're looking at, right? So I can go back and say, doctor is interested in healthcare or this sector. Perhaps I should go back myself and take a peek at it. I would really love if you can do that, doc. Do that. But I have just a quick round for you, right? Strong or weak Naira? Where's your vote?
I think I'm not really in favor of a strong or weak Naira. What I'm in favor of is a market-driven Naira.
Which is a weak Naira.
I believe in the laws of demand and supply, right? And I believe that it's not necessarily a weak Naira. And that's why I said concentrating on exports will allow us to have more foreign reserves. What we need is dollars. And we're not doing things that produce enough dollars. So if we do more things that produce more dollars, and we, unleash the true potential of this economy, because there's our real GDP and there's our potential GDP. And the gap between the real GDP and the potential GDP is called the GDP gap, right? And I feel like there's a gap between where we are and what our potential should be. So if we get our act together with regard to attracting investments, both domestic and international, and then we get our act right with regard to exports, which are the only two levers that we can really pull at this stage, then we'll have a market-driven naira, which will be able to trade according to the laws of demand and supply. I mean, don't get me wrong, there is no truly free fruit. I don't believe anyway, and this might be a bit of a controversial thing to say, but I don't believe that anybody has a truly free currency that they will not control if need be.
One way, that through monetary or through trade or through tariffs and all that. You're right. I agree with you.
If the dollar goes into free fall, these people know what to do.
Yeah.
Like, nobody is going to allow complete sort of freedom in the rate of their currency. People will people intervene, governments intervene, always intervene. But I think, a market-driven approach, or a more market-driven approach is necessary, but we need to get there, right? We have capital controls right now, and there are reasons why we have capital controls. And there's evidence. If you watch my videos on where do I talk about capital controls, I talk about capital controls actually in my IMF and economic policy videos, where I actually talk about when capital controls were used successfully in Malaysia and in Chile. And, developing countries, a lot of economists would argue that we need those capital controls, right? But I think what we need more than that is a really clear way, and it's so difficult right now in this to compete with every single country in the world, but we need a really clear way to attract investment and to exponentially increase what we export, and that will help stabilize the economy and create jobs and lift people out of poverty.
Great answer, Doc. I mean, we'll be here for close to an hour, 30 minutes, 700 listening. I'm just basically running down your economist brain now. My second question on the economy is this: does Nigeria have a low income problem, or are prices just too high because of inflation? I know it's both, but if you had to do a scoring, which is more of a problem? The very, very low minimum wage in Nigeria, a worker earns by just minimum wage numbers about 30 grand a month. Let's not even convert that to dollars. Or is it that the price of Coca-Cola is nearly 100 naira? What's the bigger problem?
So Nigeria has more people living in extreme poverty than anywhere else in the world. We've become an extremely efficient poverty manufacturing machine.
Jesus.
We have almost half of our entire population living on less than $1,000 a year. So even compared to, India, for example, in India, less than 10% of their population live in extreme poverty. In Nigeria, it's almost 50% that live in extreme poverty. And in absolute numbers, there are only 80 million people in a 1.3 billion population in India that live in extreme poverty. Whereas in Nigeria, there are over 90 million living in extreme poverty, and we only have 200 million.
90 million? So is that 990?
Yes. We have more extremely poor people than anywhere else in the entire world, including countries that have 4 times, 5 times our population. So in terms of income, Nigeria is one of the only countries in the world that has had their GDP per capita, which means the amount of money that the country makes per person dropped for 20 years running in real terms. So we do have a problem of low income, right? Nigerians are not just poor, we're remarkably poor.
Oh my God.
More than other poor countries. So I do think we have an income problem. And what makes it worse is the inflation. Inflation right now, we're in a global inflationary environment. Even in America, they're seeing higher levels of inflation than, gosh, recent memory, I can't remember when inflation was this high, either in America or in the UK, actually. So we're in a global inflationary environment. But Nigeria, obviously, because of our low levels of income, the levels of inflation particularly affect the poor because they find it harder and harder to buy simple things like food. And already the average amount that a Nigerian spends on food is almost 70% of their income. And that's compared to just 10% of income in the UK. So almost all the average Nigerian's money is spent on food compared to just 10% in more developed countries.
That answers it. So let's drill down on these numbers. If 90 million Nigerians are extremely poor, and just a few can buy DSTV, then really what is going on in the country? Why does MTN have so much numbers? Why it's because I'm trying to marry the two figures together. Nigeria's a large market. You bring stuff in here, it sells, but then we're poor. What's going on? How are we funding this lifestyle in Nigeria? How are civil servants funding food? Do they spend 70% on food? How are their kids going to school?
How are we funding our lifestyle?
I mean,
I was discussing this actually. So I do, if you want to have an analysis, anybody listening, if you want to have an analysis of these numbers, because I can't go into the analysis of the market size right now, I am posting my video right now on Nigerian market size, where I do a deep dive into the poverty numbers, into the income numbers. So if you're starting a business or you're an investor, you get more context in terms of what the numbers are and how to target your market. So I go through the size of the middle class and all of that, but I won't go into that here. But I'll just go into funding our lifestyle, right? Because I think that that's such an interesting concept. Like, how do Nigerians have all of this money? So Nigerians, and I don't know how to put this in a more polite way, have a very high noise to money ratio.
Say that. Doc, say that again, please. You got to say that again.
Nigerians have a very high noise to money ratio.
God.
So the noise that we make is far more than the money that we have. People have argued with me, right? That Nigerians are the number one spenders in Dubai. That there's no nationality that spends more money than Nigerians in Dubai. And I'm like, but what makes you believe that?
Don't Russians spend more?
Data. There's actually data on the Dubai tourism website where they write the top 10 countries. It's not something that we can argue with. They say, oh, Dubai are wrong, they're racist. We're the ones that spend the most. What did I say? A high noise to money ratio. I'm not the richest man in Norway, but he's richer than all the richest men in Africa. But we make noise. They have the biggest brands. We don't know the richest men in Sweden. Well, any big man in Nigeria will carry, escorts.
Pilot car.
And a second-hand Bentley or a third-hand Bentley and be roaming around Lagos. We have a high noise to money ratio. So how are we funding our lifestyle? We're not funding our lifestyle. When we look at the statistics from the Nigerian Bureau of Statistics, when we look at the statistics from the World Bank, it gives us a realistic picture. Once you remove the noise and the vibes, Nigeria actually has an extremely small middle class. So there was a project that I was doing with financial institutions where we actually had to look at the amount of people over a certain threshold. Kalu, I was humbled.
Tell us what
happened. Because I saw for real the amount of money that people have in their accounts. I can remember that in my book, Economics, Banking and Finance, in emerging markets, I go into the reasons why the Nigerian Deposit Insurance Corporation only covers 500,000 naira. I thought that was way too small. So if a bank goes bankrupt for some reason, then the Nigerian government is only willing to cover you for 500k. And I used to argue that it's just too small. And they told me that covers 98% of deposits in Nigerian banks.
98%.
I say it is a noise to money high noise to money ratio.
Doc, I'm going to stop asking you questions because I don't know what's going on. I'm trying to, 98% of Nigerians have less than 500,000 naira in their bank account. Is that what you're saying?
That is what I'm saying.
Wow.
So actually, the Nigerian Deposit Insurance Corporation is right. They're absolutely right to set it at 500K.
Wow.
Because that will cover most of the accounts in Nigeria. If you give most people 500K, it's going to be even more than what they have in their accounts.
Yeah, good. Oh man. Okay. Well, because someone else.
It's not small. You understand? I thought it was like I thought deposit insurance. Like I actually have a lot of videos on deposit insurance. I won't go into that at all. But like I love deposit insurance because of the way it prevents bank runs. And I have a whole video on banking and finance and bank runs and the deposit insurance because I'm a little obsessed with it. But one of the things that I always bugged me was about this seemingly low amount of money until I actually did the research and realized it's 100% adequate. They set it at the right level for Nigerians. The rest is noise.
I hear you. Doc, someone is asking the source, the exact source of the data on poverty. The exact source.
That is the World Bank.
The World Bank. I also know that the Nigerian Bureau of Statistics has the poverty definition. I think I posted it once and everyone didn't believe. I think it's less than 153. I'm going to look for that tweet. The Nigerian Bureau of Statistics has what they call poverty in Nigeria. So if you earn less than that annually, and it's less than 200,000 naira from the Nigerian Bureau of Statistics. I did post a tweet and everyone was like, this is a mistake. Is it a typo? I said, no, that's what NBS is saying. So I hear you. We make a lot of noise, but the poverty is real, but I don't think there's anyone listening on this spaces that his kid, and I might be mistaken, how many people on this spaces do their kids go to the government schools? How many people on this spaces go to government hospitals? Most people on this spaces have a generator. So, and then most people on this space probably work for someone. I'm just wondering how we are surviving in Nigeria. Fuel has gone up by about 200% since, say, even 2000, right? Healthcare is expensive. Rent is expensive. The naira is devalued. Wages have stayed flat. There's an oversupply of workers, so their wages cannot go up. I wonder how Nigerians are surviving. That's just, I want, is it all PP? Are we doing something personal? Do we have a side business? Is that what everyone is doing? Because the numbers it reminds me of the guy, the CEO of, was it Telcom, the telecom company that didn't want to invest in Nigeria because he looked at the numbers and said the Nigerian economy cannot afford to have cell phones. So, Doc, that's where my head is going to. In that regard.
Sorry, your question?
Yeah, so how do we tie in the low record numbers, the poverty numbers, to the very high expenditure that we see in Nigeria on non-governmental goods and services? Education is not run by
I don't see high spending at all in Nigeria compared to what this economy should be. There are 200 million people
schools in Lagos.
In this country.
Schools in Lagos. How many people go to the private schools? Are all over Lagos, and they charge well above, quote unquote, the annual wage in Nigeria.
How many? No, this is not real. Like this thing that you're saying, it's only in Lagos. I told you, I've been to every single Nigerian state. So as soon as you leave Lagos, you get one shock. Then when you start going to Zamfara, Sokoto, Katsina, different parts of Kaduna, have you been to Bingwari? I've been. Have you been to Niger State? I've been everywhere. I've been to Maiduguri, and I'm going to see all of these places. Lagos is an idea of Nigeria. Katsina is the real Nigeria. When you go there, you understand where these statistics are coming from. But if you're just looking around Lagos, especially if you live on the island, I live on the mainland. So obviously, poverty is very obvious to me. All I have to do is cross over to the bridge in Agege and I can see it. But if you live in Ikoyi, you somehow get the idea that there's no poverty in Nigeria because it's a very small idea of what Nigeria could be, but it's not. But as soon as you get, even in Abuja, the purchasing power, there's this article from Steers that talks about purchasing power in Abuja very low. So the numbers don't
back you up.
necessarily correlate with the noise.
I hear
South
you.
Africa has 60 million people. Nigeria has 200 million people. And we're making about the same amount in GDP.
Okay,
it's not even, so yeah. So yeah, I just think that Ikoyi is an enclave. Mainland is closer to reality. But once you start going to Abeokuta Road, you now start, even when you leave Abeokuta and you start going into other parts of Ogun State, you start to get the reality shock. I've been to hospitals where 50 naira is a problem.
Yeah, doctor,
we're not even in the north. We're just outside Abeokuta.
Doctor, everyone says you're correct. Someone actually sent me a world poverty map, which I'm posting on the tweet. Everyone says, yep, doctor is correct. Lagos there's no middle class. So, yep, we agree on that point, doc. Yeah, we got it. So, my next question to you, doctor, is this, right? We're talking about alternative investing. Is Bitcoin, cryptocurrencies, are they alternative investments?
So I do all the calculations in my Bitcoin and cryptocurrency video, which is also on my YouTube. It's about an hour long, and I go through all the different calculations that you need to do, from CAPM to the Sharpe ratio to the efficient investing frontier, to whether you're looking for alpha. I go through all the different calculations, including the risk levels of Bitcoin and Ethereum. And I think I do a scenario for Bitcoin, Ethereum, and Ripple. Against the American Stock Exchange. So if you want a real sort of lecture on cryptocurrency investing, then go to my YouTube. Obviously, I can't do it in the 1 minute that I have to talk, but it took me an hour and a half to go through everything in that video. But in the short answer is, it really depends on what you're looking for. It's an extremely risky asset class, extremely volatile asset class, and for me personally, it's not a big part of my portfolio.
Gotcha. Why?
Sorry?
Why? Why not?
Not because I'm not a Bitcoin maximalist or minimalist. I'm pretty neutral in terms of my approach to cryptocurrencies. I think, it could be something, it could be nothing. And there are plenty of recognized asset classes that give me a predictable return on my investment every single quarter, in fact. Eurobonds, for instance, mutual funds, certain stocks, where I'm trying to get a predictable return on my investment. So I have a lot of money in fixed income and real estate, and any sort of alternative investments, I make up a smaller amount of my personal portfolio. But obviously, that's me. If you want to know the portfolio theory behind it, my banking video talks about portfolio theory and value at risk.
Gotcha.
If you want to use equations and math to calculate what proportion of your portfolio, according to your risk tolerance, you should be investing in certain asset classes. But I'm just talking about my risk tolerance. I mean, if I can get, a few $100,000 every quarter from a fixed income investment, I just don't see where crypto fits into that, except for above the efficient frontier for investing.
Gotcha.
And that tiny part that I'm using to look for alpha.
I hear you. And if it's a big word, you got to define it. What's alpha?
Alpha is a supernormal normal return.
Gotcha.
So you get your normal market returns, and alpha is a supernormal return for taking a much higher risk. And it could, like a lot of portfolio theorists don't even really believe that alpha exists. They believe that it's survivor bias,
Gotcha.
or they believe that it's a game of chance. So if you're willing to, they say it's something like Naira Bet. But if you're looking for that alpha, as I explain in my cryptocurrency video. Then there's ways that you can creatively include cryptocurrency assets as part of your portfolio.
Gotcha, makes sense. Doctor, your Nigeria has a high noise to money ratio is trending. Just letting you know. That is, and I don't think I've heard anyone define Nigeria in that light. So high. So you should copyright that, right? High noise to money. I hope the South Africans are not on this space and are listening, or the Kenyans, because that would just be we don't want that, right? So we don't want anyone. But doctor, someone is asking, right? Let's talk about Flutterwave. Let's talk about 3 billion valuation. I think people are there's valuation, there's earnings, there's capitalization. In looking at Flutterwave 3 billion and taking, say, a Zenith Bank, what's your correlation? Can you explain to us, is Flutterwave now more valuable than Zenith Bank, or are they simply more? What's the correct term to use if I look at Flutterwave and I look at Zenith Bank?
If you invest in Zenith Bank shares this year, they will declare a profit of 250 billion naira. That money is very clear. Audited by KPMG or EY. That is real cash that you can go to a vault and almost pick up. And they will pay dividends, predictably, of something between 2 and 3 naira to shareholders. That is the public market. That is a profitable business. That is a money printing machine. Now, Flutterwave, on the other hand, is a bet that in the future, this company is going to meet up with this valuation. This is what we see as the future capacity of this company. That is a very, very different game. We don't know if they're making profits. We don't know, well, obviously I'm not going to tell you. we don't know what their numbers are, but we know that investors are taking a bet that the future of banking is with players like Flutterwave. And the past of banking, even though they're still making money, is with players like Zenith Bank. So right now, Flutterwave is seen as more valuable based on their growth rates and based on the way that private investors see the payments market and payments growth in Africa. That is very different from Zenith Bank, that has told you their profit, PAT, profit after tax, profit before tax, dividends to shareholders in real cash. That's a very, very different thing. Because that is actually, that's not an expectation. That is what they're going to do this year, I've told you. So technology companies are valued on what people believe that it's going to be. It's a very different method of valuation, and this is where people get it twisted, right? VC valuations, PE valuations, very different. A private equity, most private equity companies, traditional private equity, they're going to look at the exact profit that you're making and times it by 8, and that's your valuation. If you don't like it, go and hug a generator. It's not debatable. I go and hug a transformer. But with venture capital, we have a more, would I say, creative way of viewing companies. When I look at a company with my venture capital hat on, because I still do private equity investments, I still do public market investments, but when I look at an investment with my venture capital cap on, I'm looking at the future of that company and what it's going to become. And I put a value, I put a number on that company, which is very different from solely looking at the profit and saying this is the value, which we're doing for Zenith Bank. But with a venture capital investment, it's somebody's idea of what the company is going to become. It's not based on the exact figures. It's based on the trajectory. It's based on the growth. It's based on the traction. It's based on the founders. It's based on the team. But, sometimes it can be a lot bigger and they can grow a lot bigger than predicted. Sometimes it can be smaller. And what's happening, and I talked about the Tiger Global Core right now. I talked about the Tiger Global Core because I think that call that they made, I think it was yesterday, was really, really interesting, where they said that they pointed out that when I think fintechs are pretty safe valuations, to be honest. So in the fintech industry, we've not seen it. But there was a company called WeWork, for example, that was valued, I can't remember the figures, but let's say it was valued at $50 million. I'm just throwing a figure out there. I can't remember what the exact figures are, but let's say it was valued at $50 million by venture capitalists. I told you that public markets are wicked. When the company wanted to list, it could not even list finish. The real razor-eyed people in the banking industry, they're like, this thing is not a technology company, number one. It's not even close to 50. They wrote it down to like 3. Because when you get to the public markets, there's no, with a VC, there are only 3 or 4 people looking at you. When you're in the public markets, the whole world is looking at you. So people will, even if you can deceive 3 venture capitalists, you cannot deceive 100,000 people. So then VC is looking at potential, and it's the opinion of a relatively small group of people. Private equity is different in that it's based usually, even though it's starting to change, but usually on the EBITDA of the company, the profit of the company times a certain multiple, and that is it, no argument. Correct. Whereas in the public markets, there can be sentiments attached to the valuation, but like the WeWork example, in the cold light of day, it can be another thing when everybody has looked at it. So in terms of Flutterwave, fintechs grow very quickly. Yeah. And fintechs have high valuations because of the network effects that they create. So I think that's what they're looking at. They're looking at the future. And I'm a Flutterwave believer. I even think it can be worth more than that. Nice. But I'm saying, in cases like WeWork, of course, they valued it at 50 in the eyes of 3 venture capitalists because there's only 3 or 4 people that are valuing it. And then when it got to the private markets,
and it crashed like a stone.
Like crazy,
yeah. So I mean, so it's an expectation of earnings vis-a-vis actual earnings, more or less. If we talk about the earnings side, i.e., Flutterwave versus Zenith Bank. Well said, Doctor. Very, very well said. Question from Kenny. Where would you advise a young person to invest his money? He went to the bank recently, and all the bank gave him is a fixed deposit. I don't know how old he is. We look kind of young. Where should a young person, 25-year-old guy that maybe got $1 million from his uncle during Christmas, if you were to advise, you're not offering financial advice, but if you were that person and you had to invest at that age, at that time, this time, what would you do with that money?
I think there's no better time than right now to start investing if you haven't started investing already. And the advice that you hear from financial analysts or financial advisors is really to maintain a diversified portfolio. So if I had $1 million or ₦1 million, I would try and diversify it and also get to know and get to understand what I was doing with the money. So I'd probably buy some stocks. I'd probably try and be diversified by currency as well. So I'd buy some stocks. Maybe I would join an investment club and invest some of it in deals, and I'd invest some of it in real estate. But you can do that real estate in terms of through an investment club. So obviously those smaller amounts of money can go a much longer way. Yeah. But I think, experiment with different asset classes. I'm diversified in terms of asset classes, and I invest across asset classes. And I think that, getting to understand the different asset classes is really important. And investing in a diverse way is a general safe advice.
Okay. And just to make a quick comment, right? So I am pushing back on Doc because I'm interviewing Doctor, right? So it's not my view. Just so you guys understand, when I ask Doctor a question, I'm asking her to get an opinion from her, right? So I'm not saying she's right or wrong. I'm just asking questions. I see some text. So, Doctor, you have a lot of fans. So I'm just explaining to them that I'm just asking you questions, right? Just so they know, right? So, okay, but Doctor, someone's asking, right? This is TOO. What is the impact on diaspora funding? Can diaspora funding, i.e., remittances, has this not helped? I know we talked about CBN, 5 naira for dollar deposit, and you talked about exporting what we do easily, music, sports, and all that. He's asking, why really has that not had an impact? I know it went down a bit. CBN says it's gone back up. Has it gone back up because there are just more Nigerians, quote unquote, Japan? Or are people like yourself that believe in Nigeria actually investing back in Nigeria? What's the real answer to this diaspora according to the CBN funding going back up? What's your take on this?
So I think during the pandemic, our brothers and sisters in the diaspora took a hit. And perhaps the governments even had to help them with, stimulus checks and all of those things. They were on furlough, right? And they had difficult times themselves. So they, I think they were trying to put on their own oxygen masks before trying to help anybody else.
That's a good way.
2020, this year, 2021 was a period of recovery.
Yeah.
But we're seeing now developed markets not quite back to pre-pandemic times. I think they're still struggling with self-inflicted inflation from the stimulus that they did to save their economies during the recession. But I think, they're gradually picking up again. And because of that, our brothers and sisters in the diaspora are now feeling buoyant again. So when you ask them for money for school fees, or you ask them for money for hospital bills, they're now more able to send those remittances back in. So I think as the developed world continues to recover, our remittances will once again be bolstered. But in terms of large capital investments, we have not been successful enough as a diaspora group to fund large capital investments. So there was a study done by the NIPC. I don't know if it's been published yet, but there was an interesting study done. I think it was in collaboration with the World Bank, where they looked at what diaspora remittances, what Nigerians spend. When somebody abroad sends money to you, what's it spent on? And unfortunately, it's not spent on investments. Largely, it's spent on school fees, on food, on hospital bills, on emergencies, but it's not used to make capital investments. Could this change over time? I think it is changing. I think the second generation of diaspora are more integrated into these societies, and they're able to make more real money. And if we make the investment attractive, or if we make this environment attractive, then I think we will see more diaspora funds going into capital investments as well, going into infrastructure. But we did raise a diaspora bond a few years ago. But it wasn't Nigerian diaspora that invested in it. It was just the normal American institution investors who will see 70% and not invested in it. It was just the normal hedge funds and stuff, some briefcase portfolio investors. I think that as our diaspora gets richer, we'll see more remittance.
Gotcha.
And that is a helpful part of the mix because it funds consumption, and consumption is part of GDP. But for large capital projects right now, we're not seeing, so the data isn't showing us or isn't telling us that our diaspora currently are capable of that.
Gotcha. Thanks, Doc. So we have about 8 minutes to go. I don't want to keep Doctor longer. She has to go eat carrots, swallow, and all that. But yeah. So Doc, and again, I do apologize. If someone can help me out, I would love it. When I start spaces at the very end, I cannot add speakers. So I see the request, but I just cannot add. It's a technical issue. I apologize. Send me a DM. I promise I'll read it out to Doctor. Doctor, someone is asking here, what do you think about ETFs? Do you have a favorite ETF? that you invest in? Do you have one, or what do you think about ETFs as a whole?
So on the ETF questions, I don't have an ETF. I probably know why he's asking that question, because I'm always sort of defending ARK Innovation ETF.
You're a catty girl.
Sorry, yeah, Mommy Kathy is my Mommy Gio of investing.
Mommy Gio. That's a good
I'm
one.
always defending my Mommy Gio of investing, so I think that question came from talking about Mommy Kathy. I'm not invested in her ETF though. I don't have a firm opinion about ETFs, but I think on the technology side, and I'm surprised I haven't spoken about this already. I believe that technology stocks are very vulnerable to pro-cyclicity. We call it in finance, which is boom and bust cycles. And because of that, because of the long-term nature of an ETF, you might find yourself on a bit of a roller coaster, particularly when it's actively managed thematic ETFs. So I'm long-term, I feel like Mommy Jew may be right, but it's a big bet. And what I say to people is, people that invest in her ETF hopefully are accredited investors, and they know why they're investing, because they're looking for alpha, they're looking for supernormal returns. If you don't like risk, then go and buy bonds, right? Go and buy Germany is giving -1 on the
Oh my
return.
God, yeah.
With less money than you started with. If you don't want risk, you don't want to risk your capital, go and buy a bond, right? The people that are investing in Mommy Gio know what they're investing in.
Yeah, but I think the fact that people don't understand that she's a disruptive investor. She's investing in companies that are going to change. Tesla, disruption, right? That's the theme, right? So when they invest, they want to make money, but they don't understand that she's making money by disrupting. So when things change around, then of course she gets disrupted a bit. So yeah, so good point. Question for you, right? I like this one. He says, what traction metrics should I really focus on? What traction metrics? I know you answered it, but let me just ask you again. Revenue, users, merchants. Just want to know, what should he focus on in terms of for a fintech company? This is from Odogu.
I think when you're designing your pitch deck, you want to focus, if I'm being honest, on things that make you look good, right? So if your number of users is increasing rapidly, then focus on that, right? If your numbers of transactions are increasing rapidly, exponentially, then focus on that. Focus on the metric, I think. You have to put a lot of metrics in your pitch deck, but focus on the metric that paints you in the best light.
Gotcha. Lots of questions on investment clubs. Which ones to join? Do you know any? Do you want to just comment on that? So I can just put them all together. Lots of people are asking, which one should I join? Do you know any recommendations? Just lots of questions about that. Yeah. Do you have any?
There's all sorts. Yeah. There's all sorts of investment clubs, all sorts of investment syndicates, and it depends on there's real estate investment clubs where people put money together to buy like land and Nigerian real estate, for instance, and do real estate projects. There's women's investment clubs, there's tech investment clubs. Like I tweeted about our Catalyst Fund syndicate, and that's an example, I guess, of a technology angel investing thematic investment club in a way. There's all sorts. I can't really recommend. You can even form your own if you don't think within your friendship group there is sort of something that fits within your theme. But I would say always start with some. You've got to really gauge the risk appetite of your members. So you're investing in things that match their risk appetite. So even if it's just, boring old bonds, I mean, you know the return that you're going to get at the end, so they're not that boring. When I said go and buy a bond, I wasn't making fun of people that want to buy bonds.
Of course not.
Let me tell you, most of the richest men in this country, they don't buy bonds. They don't even take any risk at all. If you ask them to come and invest in startup, they'll run away from you. They don't want that risk. They just want to have their money in somewhere soft that will not give them any heart attack. So at the end of the day, if you want to invest in boring stuff, then, that give you a fixed return, then that might be your approach. But when you're joining an investment club, just understand your risk tolerance and the risk tolerance of everybody, in that club and make sure you're on the same page.
Gotcha. Hey guys, we've had Doctor for about, I'll say 2 hours now, and I've taken her everywhere: PE, alternatives, investing, swallow, everything really, poverty. And she has been very gracious to share all that information and knowledge with us. I do not want to abuse her time and her privilege here. Doctor, I'll just ask you two last questions, right? I see lots of questions here on ride hailing, what you think about ride hailing, and I have a last one for you. The guy is from Kenneth. Kenneth is asking you, if you had $1 million and you had to start a business or you had to invest, which would you choose? I think it's a very loaded question. It sounds very simple, but it's very loaded. But if you could answer the ride sharing one from Yusuf Iyemoga, and then we could end with the Kenneth question. This guy is asking me, please, yeah, so it's still the same ride sharing. This is also ride sharing. We could take the ride sharing, then we could take Kenneth. Someone is asking me about robots investing in buying currencies and equities. Doctor, I'm going to answer. I'm going to ask you the co-answer. Everyone trades with algos. Goldman Sachs has algos, which are robots that trade. Be very careful about the ones in Nigeria asking you to invest in a robots trading app, but go and bring 1 or 2 people to also join so that you get 10% every month. Once you are asked to go bring someone else to that investment in quote to earn a return, that's a flag for a Ponzi scheme. Ponzi schemes are you are making your return based on who you are bringing, or you have this referral program. So be very careful when they ask you, hey, go bring 1 or 2 other people to join this robot investing. Doctor, if you have a comment on that, then we'll take ride sharing, and then we'll end with maybe Kenneth's question about $1 million if you have to save, or if you have to invest, or you have to start a business.
So yeah, I think Nigerians are particularly susceptible to Ponzi schemes, and it's because this mentality of quick money, and that's why we have such a massive betting market, right? Where we have these poverty figures, but we also have huge betting companies, where people just want to make money quickly. And I'd say be cautious of Ponzi schemes. Anything that's not SEC registered, anything that is not under the premise of CBN is probably more dodgy than the stuff that is, right? So that's really my perspective. Like, most trading is done with algos, and if you look at trading in America, you can see that it's almost like milliseconds after an earnings call, but immediately like tons of shares are sold and stuff. So you can see there's not human beings doing it because it would never be that quick. So that's really sort of my perspective on Ponzi schemes. And then the second question was around ride hailing.
Ride hailing.
I've not invested in any ride hailing, and I don't know very much about it. But I do know that the network effects for ride hailing companies are local, so they're harder to scale. So for an Airbnb has managed to become the platform of choice across the world for accommodation, right? But Uber has just so many local competitors. Like in Nigeria, it's competing with Bolt. In China, it's competing with Didi. In what was that thing, David? What was that one that we used in Bali? Something like Grab. Yeah, everywhere I go in the world, I have to download another one. But I can use one via Airbnb across the world. So in terms of scale for these kind of platforms, I think in ride hailing, the network effects are local. Whereas, in maybe other platform businesses, you get more global scale. And then the $1 million question, if I had an extra $1 million, would I invest it or would I put it into a business? And I think this is a nice question to end on because we're right back at the beginning where we started. I'm talking about risk perception and what that means to all of us. If you had, there are plenty of employees in companies in Nigeria that probably have close to $1 million, maybe $500,000, maybe $200,000, and they're getting a good salary. like I said, the car, soft. The house in Banana Island, soft. The kids are at school abroad. What else are you looking for from life, right? So they wouldn't be the kind of people to start a business. They would invest in real estate. Plenty of senior bankers, for instance, own tons of real estate, own stocks on the American Stock Exchange. They have massive real estate holdings, right? But they'll never quit their jobs. And that's one perspective to look at it, one set of risk tolerances. And don't forget, you can go extremely far without starting a business. So if you look at someone like Aruma Altair, for instance, one of my great mentors, she never started a business. She went from the World Bank to the AFDB. Now she's teaching at Oxford. She ran SEC, right? You can have a stellar career where you become wealthy.
Shout out to Aruma Altair. Shout out.
Business.
Yeah.
People like Mrs. Okonjo or Mrs. Okonjo-Iweala, for instance, never started a business, but extremely successful in our own field. Mr. Akinwumi Adesina never started a business. Even our governor, Godwin Emefiele, has never started a business and yet become one of the most powerful and influential men in Nigeria, right? Having never started a business. So starting a business isn't the default way to having a successful career or having power or having influence. So on the $1 million question, it really depends on what you want to do and your level of risk tolerance. Don't forget that most businesses fail. So most businesses that are started fail. And out of the businesses that succeed, most of them never make over $1 million. So, and you work extremely hard on a business. You have it. You sort of sacrifice so much for running your business that a lot of people think, if I had $1 million right now, I'd rather put it in real estate, get rental income for the rest of my life, and perhaps not work on that. I chose to be an entrepreneur, right? But if I was, I chose to be an entrepreneur, and I think I'll continue to be an entrepreneur for the rest of my life, right? But if I was the kind of woman that perhaps, wanted 9 children and wanted to cook fresh egusi soup for my husband every single day, and wanted to...
I hear him at the background. I hear... Who's got the background, Doc? Who's got the background?
Clean the house personally and remove cobwebs from the window every single morning, and welcome my husband with flowers and candles every single day when he comes back from work in my little apron. And obviously I wouldn't have started a business, right? I would concentrate on what I wanted to do. So it really depends on your risk tolerance. It depends on what you want to do, the kind of work-life balance you want to have, other factors in your life, like your family commitments, for instance, what you would do with that $1 million.
Yeah. I think that's a great answer, Doc. Great answer. And Doctor, all that is left for me, I apologize to everyone that has sent the DMs and requested to speak that I didn't get to. I need help on Twitter. If someone needs a job, someone is in school that wants to be an assistant and can do this from Nigeria and all that, I would love to take your CV, just someone that can just do this every week, right? So, and all that. But Doctor, thank you so much. At a point, we had close to about 1,000 and something people listening to every word you said because they were tweeting it on real life, and I could see my tweets going up, especially the quote of the day. Nigerians have a very high I don't know where that came from, but it's there. So you've been a great sport. I think we've been educated and also entertained. I just want to say also thank you to your husband. I know he's just a gentleman, and we just want to just want to appreciate him as well. Thanks for honoring the invitation.
Brown envelope.
Is that what you call him, brown envelope?
Yes.
Doctor, my final last question. This is a very, very serious question, right? Why do you have Aliko Dangote's picture on your? Yeah.
I've been a Aliko fan since I was a teenager, right?
Okay.
Because, like I told you, I grew up in an all-white village, and when our career counselor came to speak to us, She told me to be a lollipop lady, that would be the best career for a black person, that she doesn't see me going to university. A lollipop lady is a lady that helps people cross the road.
Cross the
so when
street, yep.
somebody is on one side of the road, you hold the lollipop. And she said that this is the only job that a black person can do. Remember, this was ages ago, right?
Yeah.
So when I started, when you grow up in a place like Lowestoft, when you see my school picture, there were lots of white people and then this black dot, right, in the middle of the picture, just to give you some context. And I can remember when I was trying to lobby in primary school to be one of the angels in the nativity, and my teacher told me that angels cannot be black.
Yeah. Yeah. Oh my God.
Why would I put a black angel in the play? That doesn't make sense. Angels are all white. So these kind of things where they're just telling you that you cannot move forward in life, that you should bother to apply to university, all of these things, right? When I got to hear about a guy that owned this massive cement factory and had his own jet, and he was all the way in Nigeria, why do you think I left England so quickly? I came to come to Nigeria to see where these kind of people are coming from, because it was really, really isolated, even from the black community in London. It was its own kind of enclave. So I've just been an Aliko fan. I like the kind of impact that it's had, and I hope that one day I'll obviously I don't want to follow exactly his trajectory, and I think that you have to take people in parts, not in wholes. So there's nothing completely great about everybody, and he's not a perfect person, and neither am I. But I think the kind of impact that he's made in the Nigerian space, the way that he's been willing to take big business risks, even at a relatively elderly age when he didn't have to, I think is really interesting. And there's a lot of things about him that I find interesting. That's why he's on my profile picture. So I'll just close by saying, thank you to everybody listening. I've really enjoyed answering the questions. I've really enjoyed talking to all of you, but I've only spoken for an hour. So my YouTube channel is on my Twitter. There's a course on angel investing, macroeconomics, microeconomics, project finance, banking and finance, corporate governance, all the stuff that I've not been able to really go into because of the constraints of time. And then I've also tweeted about the richest family in Sweden on my timeline. So if you want to have a look at that and actually know their names, they own 30% of the stock exchange and nobody has heard of them. And that's why I say we have a high noise ratio. Yeah. And then also one last reference is to our syndicate fund. So if you are interested in angel investing alongside us in the main fund in health tech and fintech, so companies like Flutterwave, like Helium Health, and then also, reach out to us. There's a expression of interest form on it, and you can reach out to us and see whether that's a path you want to follow as well. So thank you very, very much for your attention. I can't believe there's 1,000 people on this call, man. Hello, you're popular.
Doctor, you, everyone here is your fan. If I say anything bad, they send me messages. Stop talking to doctor like that. She's right. Stop it. So, Doc, yeah. Your fans are, I know, please, doctor is a friend here. I hear it. Doctor, we do appreciate it from the bottom of my heart. And then just say, you talking about Dangote that way with the positive affirmation, it gives me a new light, and it tells me the power of images, the power of successful images. You are a successful Black woman making money in Nigeria from business, from investing. Very, very tiny demographic. And there are many women that look up to you, and you are a blessing and a light. So I want to say thank you. And I mean it from the bottom of my heart. You are a blessing. And I think you're just going to go far and far and far. I can always say I had doctor on my spaces, and I'm going to just frame it and NFT it and retire and become a billionaire. That's my retirement plan right now. All right.
Thank you so much for having me. I appreciate it.
You're very welcome, doctor. And so just to clarify the CV, I'm just looking for a brand guy that can run the spaces, and I just ask the questions, I can read the tweets and maybe run the Twitter better, because I kind of get people to speak. So it's not a CV. I'm not going to give someone a job. A brand guy or a brand lady, I prefer a lady that can run the spaces. It's getting bigger, and yeah, just send me a DM. Lady, brand person, can do the job at home, all that kind of stuff. Yeah, let's talk on DM. Thank you so much, doctor. This space is going to be recorded on Twitter for 30 days. I'm also going to have it on my podcast forever. So you can go to the podcast, the address is on the Twitter profile, and you can download it and read. Please take out time and read what Doctor has posted. She doesn't charge, right? Go and learn. Go learn for free and update yourself. You want to get into the VC, you want to be an entrepreneur, you want to raise funds, at least understand the terms and know how to play in that game. You've got to basically make yourself better to get better things to come to you. Thank you, Doctor. Thank you, doctors, doctor's partner and all. Thank you for sharing all the information with us. We love you and we appreciate you. Guys, go enjoy your Saturday. Take good care of yourselves. Thank you.
Good night.
Good night.